The biggest threat to your portfolio is not interest rates, it's not inflation, it's your mind. If you don't understand these three psychological traps, you will lose money, even if you're investing in the right things. These are the three lessons I learned from reading A Random Walk Down Wall Street, and it completely changed the way that I look at investing. Let's break them down, but with real stories and clear takeaways that you can actually use. You probably know someone who loves to trade stocks, and when they win, you definitely hear about it. This person is an absolute genius. They did all the research, they timed it perfectly, and all the credit goes to them. But when they lose, they probably call it bad luck. Well, there's actually a reason for this. It's called attribution bias, where we're very happy to claim skill for when things go well, but when things go poorly, we're much more likely to call it bad luck. And that's something that's actually hardwired into our brains. It feels good, but it's dangerous because it keeps you from actually improving. There's not much to take away when all your wins are from how great you are, and then when all of your losses are just purely bad luck. If you're going to be an active investor in the markets, which I don't recommend, then you do have to track your trades and investments with brutal honesty. You have to journal why you entered and why you exited. And if you can't come up with a logical reason of why you did, then you might be gambling. Don't confuse luck with skill. The market doesn't care how smart you think you are. In fact, it's designed to take advantage of that. On to the next. I remember back in 2021, I had one of my really close friends, very sharp guy. He had just started investing, and he jumped in to this Dogecoin hype right when it was happening. And Elon Musk was about to go on SNL, and the internet was convinced that, this thing was going to the moon. So my friend bought Dogecoin right before the show aired. And he goes on and makes a joke. Splat, right? Dogecoin absolutely tanks. And my friend was crushed. And I felt terrible, but I quite frankly almost wanted to laugh because, and if you went through that, I am sorry. But here's the thing. That's not just bad luck. What happened was a psychological trap. It's called the availability heuristic. So what happens is something gets put on the news. And this could be a good thing or a bad thing. And it's the only thing you see. And when something is everywhere, it has to be a good investment, right? Not necessarily. Your brain starts to think, though, that everyone's talking about this, so it has to be the right thing at the right time. And it's just not. It's just loud. So whenever something is getting a ton of media attention, that's your signal to take a big pause. Ask yourself, would I be buying or selling if this weren't trending at the moment? Hype makes you blind to the risk. You have to train yourself to zoom out. Lastly, I had an investment that was going super well. Then it dropped by like 15% in a few days. And I got spooked, but I just held. Why? Well, because I was like, it's not down to where I bought it at. I'm still up technically, so, it's not that bad, right? But it didn't bounce back ever, and it just kept falling. So I stayed in way too long. And it wasn't because it made sense or because the market was supposed to continue to go up or anything like that. It was just because I anchored to the initial price that I bought it at. And that's called an anchoring bias. We cling to irrelevant numbers and ignore what's actually in front of us. The price that you paid in the past doesn't matter anymore. You have to ask yourself, would I still be buying this today at this price? And that's how you get a better idea of whether or not something is at the appropriate price for you. Don't make decisions purely based upon the past or where you specifically entered. You have to make decisions upon what's happening in the market now. And that does not mean that because there's news that you need to jump on the news. I'm just saying, what are the hardcore facts and the data of what's happening in the market? This book didn't just change the way I invest. Honestly, it changed the way I think. Because once you understand that your brain is wired to sabotage you, you stop trying to outsmart the market and you start trying to outsmart yourself instead. So here's what I'll leave you with. Don't over-attribute your wins to skill. Don't trust the noise when you see all the headlines and people are going crazy about stuff. And also don't anchor to the past where you bought something actually doesn't matter in the future, and it's a bad way to think about the future of pricing. Let me know in the comments, have you ever fallen victim to one of these three psychological biases? Let me know. And as always, hit the like button if you enjoyed, and definitely subscribe. We've got a lot more content coming out in the future, and I'll see you next time.